I'm here, as you just said, I speak frequently on BRI globally. I did 2 speeches last month alone in Shanghai. But this is important today for 2 reasons. One, I'm a representative of 48 Group, and our chairman, who everybody knows, is here. And as you know, Mr. Barry has been a big fan, and his father had been a big fan of China for the past 60 years. And secondly, I'm quite passionate about closing that funding gap you've just heard there. So my speech is really the other side of what you just heard. This was macro securitization and syndication. Mine is actually private equity investing along the Belt and Road, because there is a track record now over several years of this. So some of you have seen these slides before. I'll break this into 3 different components. One, a 20-minute component of all the economic corridors, what exists and some of the deals within it. Secondly, what you haven't seen before is Q1 activity, because the Belt and Road is alive and growing daily. So I thought I'd add the various components of Q1, and then I thought I'd open it for 20 minutes of Q&A, because many of these things, people ask a lot of questions. You've seen this, so there's no reason for this. This is just individually populated projects from 2013 to 2015. Here's the first economic corridor. You'll notice BCIM was first launched within 60 days of President Xi launching the overall BRI in October. And you'll see it starts developing Kunming and gets to the Indian Ocean. Here are a couple of projects in here just to show you where various countries are in various forms of development. So, for example, in Bangladesh, you see the slides there, the projects there are energy projects. Now, those energy projects are backed in general by policy loans. This is going to be interesting for your syndications, because these policy loans are 2 to 3% face amount, 40 years, quite hard to syndicate. But unless you build the energy infrastructure of a country first, you can't then migrate on into infrastructure, ports, logistics, manufacturing, consumer, etc., tourism. Myanmar is a little different. The bottom one in Myanmar is a port. It came out of a failed loan. After 7 years of negotiation, renegotiation, China has been able to convince Myanmar to have a stake in that port, which is a huge win for China, because really, as you know, Myanmar has been quite close to Japan historically. And you'll also see at the bottom where CITIC has formed a partnership with the wealthiest investor in Thailand, who has over 200 companies in China and has been operating in China since 1979. So China, when it starts reaching out in equity, it reaches out to friends, much as you've just heard in the last presentation. So you see the first economic corridor is the blue on the right, and you'll see they're headed towards Southeast Asia as a priority. Next, the CPAC. Everyone here probably knows what CPAC is. It's 46 billion, ultimately 62 billion. But the first parts of this, again, are in and around energy and infrastructure. So you see the first 18 projects here are in and around making sure the country has sufficient energy to run the country, which even after 3 years of these projects still lacks energy. It's still probably 3 to 4 hours a day short of energy to run the country. And you'll see that the infrastructure, at least Gwadar, works, but some of the other infrastructure really hasn't worked. But back to the purpose of the day, which is equity investing or infrastructure investing. On the bottom, CPAC, Pakistan has not done a good job to date in attracting equity capital or even infrastructure capital, foreign capital. So what they have been able to get so far are largely government funding from Islamic funds. And the first big Chinese move was Shanghai Electric. Unfortunately, once Shanghai Electric made its acquisition for almost $2 billion, the government decided to change the tariff, which affected the profitability. Now, since then, there have been 2 acquisitions by Chinese in equity. One is a stake in the Pakistan Stock Exchange, and one is a stake, most recently by Alibaba, in a digital bank. So there's finally starting to be some equity flow into Pakistan, but again, until there's sufficient energy, until there's sufficient infrastructure, it's hard to get equity returns until these things are built properly. That is not true in the next one, which is CICPEC. Now, this shows the railways, and of course it shows the importance of Kunming. And so ultimately, it's Kunming, obviously Vietnam, Laos, Cambodia, Myanmar, with a, if you will, a central point out of Bangkok, all the way to Singapore. So you see on the left all the different rail routes which have either been agreed or already started production and when they expect to come on stream. Ultimately, you can see from Singapore, ultimately Singapore up to Kunming. And then, of course, once to Kunming, you see it's only 9 hours across from Kunming all the way across into Shanghai. What we don't have on this slide, though, are some other things which I've done, which you could probably find on the web. One is I've completed the first ever BRI, a longitudinal study about Cambodia. It's China rebuilding Cambodia over the last 10 years. And what it shows is, while it's true what Theresa May said, that EPC contracts are really Chinese-led, that is true in the first stages of energy and or infrastructure. It is not true in later stages of the higher yielding assets. This study will be cover story of Asian Private Equity magazine coming out next month. We didn't get paid for it. It was produced by Goss Research in Hong Kong, and it was approved by 10 universities and 4 private equity firms. And what it shows is, once the energy's built and the infrastructure's built and the country has a solid enough, stable enough leadership, that the private equity returns are achievable. So in Cambodia, for example, in later stages of Cambodia, once these were all built, only 30% of those investments were actually Chinese investments. Returns were really gathered by Japanese, Koreans, Singapore, France, etc. So BRI, as it's designed to work, actually does work, as we've proven in Cambodia. Also in here, it's worth noting the high-tech corridor in Thailand. And as you know, Wang Shishan was in Vietnam 2 days ago working on the 2 corridors agreement with Vietnam. So again, this is a very important component because it's Mekong Delta, and China must get Mekong Delta right as it expands outside of China. So again, here's the next one. You see again the blues on the right. So CIC, PEC, BCIM, and CPEC. This is the European Land Bridge, and this is actually signed off by the chairman of China Railways, so I know it's accurate. I'll just draw you the 3 areas because we really don't have a lot of time today. The first is the green across. That's TSR from Russia. It's very difficult to compete with the Russians, but so you've seen there have been 2 middle routes built. One is the Horgos here, which goes. Horgos is the world's largest dry port in Kazakhstan. So Horgos is important to the European belt, to the economic belt, as Gwadar is to the Silk Road. So Horgos, as it comes out of China, goes north through Almaty, west past Moscow, and ultimately, currently, it goes into Poland. The southern route goes south through Turkey, Greece, up through Central and Eastern Europe, and also goes into Poland. So there's already, even with slow volumes, there's already, if you will, jams when the shipping goes, the rail route goes from China into Europe. There will be an Iranian high-speed rail built, but for now it's not needed because BTK is working. So there's Horgos, as I said briefly, and there's BTK, which goes across Kazakhstan, through Baku, Turkey, and then up into Greece, etc. The Pakistan Rail will ultimately work as another way to save a pile of money. And you'll see that on the left side is the high-speed rail from Pakistan. On the right side is a smaller rail that's actually functional, where the high-speed rail is again not yet functional. The last of the economic corridors are in Mongolia, and I draw your attention to the second bullet point, which talks about the land ports and the aviation ports, the railway ports, and then, of course, the sea volumes here. Again, these are infrastructure returns. They're not private equity returns yet. So there they are. So those are the 6 official economic corridors that were formally launched by July of last year. But it just keeps moving, as we said. So this is not an official corridor yet. It's 16+1. It was launched just prior to President Xi launching the Belt and Road. It was launched in November of 2016. Here is some infrastructure spend in those CEE countries. Unlike others, there are lots of M&A activity in this part of the world, except they're smaller deals. There are 100 to 200 to 300 million transactions across those. And then, of course, as you probably know, China's been very active in investing in Greece. Again, these are all equity returns, low teens, mid-teens, and some of these are high teens and low 20s. So there is, again, even though it may be still, a lot of these projects are still being built, there are still great returns along here. So, for example, if you go back to this, here, the rail. So as it comes from Greece up through Poland, that's still all developing with rail. So, for example, I'm working on a transaction right now, which is logistics. So you could roll up a series of logistics plays, investments, and then sell that to somebody else at some later point in time. It was a Chinese buyer. So there are all kinds of, if you will, equity plays in and around the Belt and Road, which people have not really been thinking about yet. So the first of the Silk Routes, this was launched officially last year. I'm sure you'll recognize this. As you probably know, China has a relationship with Kenya back to the 15th century, and it's the first of the Silk Roads. And the reason I raise this is because 2 really successful projects are already highly functional. The first is in Kenya. The Mombasa-Nairobi Railway was opened 18 months ahead of schedule last May. It has so far had over 1 million passengers. It's had over 300,000 tons of cargo. It has employed 40,000 Kenyans, and it has increased GDP of Kenya by 1.5%. So it's a very successful project in Kenya. And there's obviously knock-on business from that. So within the Mombasa port, you'll see a number of companies. I think it's $2 billion of investment, Chinese investment in the Mombasa port, which is corporate investment and therefore corporate returns of investment. The second is Ethiopia, which, as you probably know, China spent over $11 billion in infrastructure and energy. Some of those energy projects are renewable. Most of those energy projects are renewable. And again, you're attracting private equity returns in these areas. So, for example, Kenya now has 5 Western private equity funds functional in Kenya. There is a series of private equity investment and corporate investment in Ethiopia. So again, once the energy's built, once the infrastructure is built, you can then move on to real estate and manufacturing, et cetera. On the real estate piece, it's really regional, and I might just use the UK as a great example of this. So if you look at UK house building in the past year and a half, you've seen that UK construction companies are very slow to expand into building new homes. However, you'll see that management teams from those building companies are buying property along the Crossrail. Because once Crossrail is built, it lists all values around it. The same thing applies in many of these infrastructure projects in China. So we see tremendous value lifts in and around some of this infrastructure. So for example, the price of housing in Ecuador has increased in the past 10 years by 1,000%. because China has invested $12 billion in Ecuador. So if you look at real estate plays throughout Cambodia, Thailand, Vietnam, Kenya, Ethiopia, even Guadar, 300%. So there's a huge real estate play in here. So I applaud securitization. I think it's fantastic. But in the interim, there's a whole lot of other things you can do on a bilateral basis to hit your return thresholds. And people just don't think about it, unfortunately, which is why I want to talk about this today. So there's the 6 economic corridors and the 1 Silk Road corridor. That's not enough. It's still going faster. So here, this is as last June. There are 3 blue economic passages were launched after being analyzed the last 2 years. They were launched last July. Yes, official. Now, remember I said before, that's after real estate comes manufacturing, comes consumer, etc. At the end of the infrastructure, you'll find ports and logistics. So here are 77 ports transactions that we've monitored. And the reason we did this originally is because of the criticism people made of China, saying China cannot afford to build these ports. They just can't afford it. Well, the actual answer is the ones in green are the debt. And you can see on this entire page, there's only a handful of green. It's either equity or construction. And I might add, this needs to be substantially updated because this was updated as of July of last year. So it doesn't include important ports that are being built now in Algeria and Morocco, which will segue into Spain at some point in time. And yes, and of course, last year, the ports were 2 years ago, which you saw in the Financial Times. Last year, the biggest outflow of funding for China globally was in logistics. Announced transactions of $40 billion outbound. That's including assumption of debt. And what you'll see there is I mapped them along. They are mapped along the original Belt and Road. And the reason we did this is for hedge funds. There's a correlation play. It's nearly, except for the 1.5 million in South Africa and the 18 million of a bus airport in Rio, it's 100% correlation. So there's an investment play in actually buying shares in logistics companies because it's only a matter of time. Those logistics companies have some strong correlation with ports. Again, a real equity play here. Now, Q1. So I haven't talked about these before. So this is how fast this is evolving. So is everybody here familiar with the Polar Silk Road? Do you know? Okay, this is not a surprise, okay? I was the only person from the UK invited to the launch of the Polar Silk Road, so it's not a surprise. I'll do it through the picture first. So let's start at the top. So Kirkenes Port. So first of all, China has been working in the Arctic for 75 years and have been actively looking at ways to build businesses in the Arctic in the last 10 years. And they have started with huge amounts of success in Iceland when Iceland wasn't doing so well 10 years ago. Iceland's economy has grown very substantially, tourism's through the roof, and they've actually banned additional purchases of real estate by Chinese in Iceland. It's been so quick of growth. So they've moved from Iceland into other areas. So you see, I said before, remember the rail route had a problem in Poland. So a new rail route through a friend of mine who runs Kaz Rail goes through Kaz and then ends in Riga. Now, if you remember, Premier Lee launched 16+1 in Riga. There's a reason why he does things like that. So you'll see the rail line goes there, and you'll also see this all then links into Riga. So Kirkenes is the world's most farther north port, and with ice-free. So it's been now agreed that Kirkenes would be the start of the Polar Silk Route at the top. Then there'll be a high-speed rail built from Kirkenes through Rovaniemi into Helsinki. And Rovaniemi there's a reason President Xi does things too, because You'll see 3 years ago, Father Christmas, Chairman Xi sat on Father Christmas's knee in Rovaniemi. Since then, you've seen real estate prices in Rovaniemi spike, and you've seen restaurants flourish, tourism flourish. And Rovaniemi is a component of the country where you could then use to bring iron ore and other metals from Western Norway into Helsinki. Helsinki becomes the key. If you remember a year ago, President Xi meeting with the President of Finland, specifically discussing how Helsinki becomes so important. Helsinki is the fastest way to get from China into Europe. It's only a 7.5-hour flight. And for those of you that don't fly Finnair like I do, then you should try it. It's also the fastest way into Beijing on a Sunday morning. It's the first flight in. So it flies direct from 5 cities in China direct into Helsinki. So Helsinki becomes a major hub of the Polar Ice Road, Polar Silk Road. Then from Helsinki, there'll be a tunnel built from Helsinki into Estonia. It's around 20 billion. It's on schedule for probably 2020. So you could therefore, when Costco is now running, I don't want to bore you with all the shipping times, but Costco is now running, your mall's on the northern right corner, right? So you then run ships around the top of your mall to Kirkenes, and then it's shipping down from Kirkenes into northern Europe through a high-speed rail. Ultimately, Archangel's not yet agreed, but that's down, but Kirkenes is agreed. And then, of course, it goes, but from the people from Kirkenes's point of view, the mayor of Kirkenes is delighted because he finally has a rail route linked from China to Kirkenes. So this will be, and as you probably also realize with the polar ice melting the way it is, that whole area on the top will be ice-free by 2050 and mostly ice-free, sadly, by 2035. So just for some numbers perspective, because I do numbers, China has 4 trillion trade per year, 90% of which is through the sea. And if I could say 40% of that up there and 30% through Gwadar and other ports there, that's a substantial savings, a cost-save exercise for China as part of the Belt and Road. So that's the Polar Silk Road. And to show you the equity plays, Chinese already get the equity play. The biggest independent electric vehicle company was purchased by GSR Capital for $500 million in March in Sweden, and the #1 ranked company in Estonia, which is an aircraft manufacturer, was also purchased by China in March. So already equity plays, even though the infrastructure isn't even built, in these very stable economies. Yes, and these are high return plays. How much do you know about the Pacific Maritime Silk Road? Right, so in the 16th century, a boat that was left China broke down in the Philippines, and the Philippines said, we'll help fix it, and sent it back home, and China was very grateful, so trying to send another boat to the Philippines. This is 1571. And if you jump forward a bit of time, you'll see that that becomes a route that goes from China through the Philippines, ultimately into Latin America, and ultimately to Spain for many, many years. And that road ended in Mexico, in Acapulco. So you'll see that there, I don't have a pointer on this, unfortunately. Do I have? I don't think I do. The second one, so since, you'll see on the first one that within weeks of announcing the ice road, you'll see that Premier Lee invited all 33 countries in the Caribbean, in Latin America, and in Latin America to be part of the Belt and Road. What you don't know is this. So we track all this data, as you probably know, since 2008. So since President Xi's been president, there have been 75 billion of policy loans to Latin America. And you'll also see the number of companies investing in the LAC area. And you'll also see the Q1 alone, those are all M&A trades. All equity transactions. So again, infrastructure loans, followed by real estate plays I told you about before, followed by equity M&A. Yes? So next, this is how fast this is moving. Everyone says it's a government, it doesn't move. Well, they don't understand very much. So last April, I went to see Dubai Ports because Dubai Ports had a bit of a disagreement with China Merchants Group in the Chinese ports. They still have a disagreement in Djibouti, but that's another story. So at any rate, since that, 10 days later, both foreign ministers from both countries met in Beijing on the 1st of May. It was the first official meeting between the two ministers, and of course then the UAE, the Sheikh, and the Sultan were both invited to the Belt and Road Forum in mid-May last year. Since mid-May last year, China has invested $7 billion into the UAE. So, for example, you could see how it starts. Foods, Costco, shipping, banks to lend to the real estate. And then China State Construction has $3 billion of projects under construction currently, and that has then led to a boom in real estate. So those of you who spend a lot of time in the UAE, like I have historically, you'll find that people were very worried about the price of housing in the UAE because it had declined so much the last 2 or 3 years. Suddenly, with this flow of Chinese funds, the price of housing is much better. And last but not least, of course, our country here. So, as Stephen will tell you, I avoid politics, but I like numbers, so I'll stick with the numbers. So under Q1 this year, in January, when Theresa May visited, and the entourage visited President Xi, the numbers agreed were 13 billion of cooperations, mostly in the financial area. And what you'll see, I don't highlight all those in this slide, what you'll see is those who are into 2 private equity funds, venture capital funds, and life sciences, mostly life sciences, biotech. There's also been a $276 million investment into Cambridge. There's also been $600 million into Oxford. There's also been an investment, a partnership between Huaxi and Edinburgh University, and a series of other investments in the financial sector and biotech. And then, of course, I am involved daily in this part of it here. So this, and I'd like to maybe explain some of the structures here. So the clients I work with don't want to sell control of their company to China. They want to sell a stake in their company to China, but they want to be able to use their technology in a much larger market. So that structure was actually piloted by and launched by the Getty family in the UK here in 2006. When Getty Images wanted to go into China, instead of buying something in China, they decided to partner with a private equity firm. And as part of that transaction, the Getty family would receive cash flow for their images, they'd receive cash flow for their management, but then they get an equity stake in the joint venture company. The company was rebranded Visual China Inc. It was not called Getty Images. It was a Chinese company, Chinese management, Chinese chairman, but the financial incentives were in fact to the Getty family. That was in 2006. In 2012, that company IPO'd for $2.4 billion. So the Getty family had cash flow quarterly for their management, daily for their usage of the technology, and a $500 million upside on that. So many of these companies are therefore looking for similar structures. So while the amount sizes are very small here, to be used in a China context are enormous. So for example, Babylon is an outstanding company in this country and has a partnership in Saudi Arabia, has just signed with Tencent to be, once something's diagnosed, for example, they can get you a doctor off that. Where Road to Health is one of our clients, that's in the front end of it. That was created by a team of doctors at Nottingham University and being converted in Ningbo, which is the largest UK university in China. So again, it's UK technology providing value to China without selling control, because these are all minority positions. None of these are purchases of UK companies. So whether it's what you see publicly formally through President Theresa May's visit with President Xi, with all the things that are public, or whether you see the private pieces of this. And by the way, I'm also working on 2 blockchain transactions. One is, as you probably know, that the data in the Chinese insurance industry it could be much better, and CIRC is very worried about it, where blockchain gives you that certainty and clarity because you can't disrupt it. So I'm working on the insurance space, and then the other one I'm working on blockchain, again a UK company, built by young people, which would do rental car, blockchain for rental cars off a pad. So you see there's a lot of flow, even though they're not the big numbers you see in Latin America, they're not the big numbers you see in other parts along the Belt and Road. These small companies add a lot of value, and look at the frequency of it. It's increasing. So I think there's a lot of positive things. Well, even though the MOU was not signed, that would have been nice, but it wasn't signed with France either. It wasn't signed with the Netherlands either. There is a lot of progress from the UK in technology with China. Maybe one more update, because this is how fast it moves. I mentioned before the 16+1 of the CEE area. I think it's fair to say in the last 3 weeks, China has taken a view that it would be Austria who would be the main point of liaison between Europe and Central and Eastern Europe. That is a huge change in policy from China. This is China's 3rd attempt at CEE. You saw the fund I had up there before. And in part of that's because of a long-standing relationship between the Austrian government and the Chinese government. It probably has an effect on our flow in the UK because the power base has been shifted to Austria. And I think it's also in part because there's a long-standing relationship between Raiffeisen in Austria and also with ICBC. If you haven't heard, ICBC has actually formed an official bank in Vienna. I think somebody here from ICBC knows this already, with capital of 100 million, and it reports not to anybody in the West, but also straight to Beijing. So Beijing has a direct influence on how ICB is handles itself in Central and Eastern Europe. So again, I wanted to show you the 6 corridors, but even past the 6 corridors, look what happens in a quarter, and then look what happens in a month. This is how fast this thing is moving. But underlying it all, irrespective of brilliant strategy and great execution, is the ability to raise capital with returns. And I'm trying to show you there are a series of these plays in here are higher returns. And those of you that are interested in those, you could, we keep throwing this up on websites, or we do things privately for people. But again, we want to show you that it's not just 2% policy loans, 5% infrastructure yields.